A lot of people right now, they look at the charts and they hear on the news, recession, bear market, and they think recession, recession, down only, down only. Well, you guys that think that are going to be really confused when you see a bounce in the market. Kevin, your video's title says Bitcoin could be in a massive breakout. Yeah, that's right. But I thought we were in a recession. We are. I thought the stock market was in a macro bearish trend. It is. So then what are you talking about? Right now, Bitcoin's price is resting upon a massive downtrend line. One that is nearly a year long from November of this year. This is a resistance line of huge caliber. It is nearly a year long. We're sitting right up. We're kind of just squeezed, wedged right into the edge of this trend line. And not only that, we also have a massive multi-year long weekly downward sloping resistance line, which we are right next to. So when you have a resistance line that is this significant, if the price gets above it, it's going to cause a reaction. People are going to react. People are going to buy. People are going to want to buy. It's going to cause a significant snap up in price, most likely. You know, a lot of people in the recent downtrend, they were calling breakouts and all this stuff, and you see it all the time. Someone will draw a chart and the price will be like slightly above the line, and they'll say, "Oh, breakout." But breakouts normally are met with major market reactions. It's the interpretation that's the key. Is the market actually reacting? Right now, guys, the S&P 500 is sitting at the 200 week. And what I notice when you go back to previous recessions, such as 2001, when the price comes down and is really far extended off the macro resistance line, when it's really far extended off to the downside, eventually you get an opposite reaction up. Does it mean the bottom's in? Does it mean the recession's over? No, you're just meeting the trend line. And then you come down and extend really far away to a new low. You're super extended off the trend line, bounce. Does it mean the recession's over? No, you're just meeting the trend line. Extend really far away now, right? You see this? This is like routine in a recession, guys. Routine. So, you know, if the stock market opens this week, whether we bounce right away, whether we dump right away, you know, we're getting pretty extended now for the S&P here off this trend line. At some point, it's likely going to have a reaction up, and it's going to run a runner back to the macro resistance. And right when everyone starts to get super bullish, the recession's over. See, the market's up. That's your sell signal, scale out, get ready for the next leg down, extend way down, extend down, reaction up. That is the type of action. Not exactly that. I'm not claiming to have a crystal ball. I'm showing you the type of action that is common in a recessionary bear market. And right now we are very extended off that trend line. So there's still room to go down for sure. And if we do continue to go down, okay, Bitcoin might not immediately break out of this resistance line. Maybe we actually end up snapping lower. But whenever we do break out of that, probably big reaction. And if there is a big reaction, that's a confirmed breakout. And remember, guys, in recessions, it's not down only. A lot of people right now, they look at the charts and they hear on the news, recession, bear market, and they think recession, recession, down only, down only. Well, you guys that think that are going to be really confused when you see a bounce in the market. Because if you think a recession means down only, and then you see the market bouncing, your head's going to short circuit and you're going to go, what? I thought we were in a recession. We are. We're in a macro downtrend. We're in a recession, but that doesn't mean we can't bounce. Do not be surprised to see some kind of rally, whether it's this week, next week, a month from now, some kind of bounce up. Could be as low as 3,200 for all I know, right? The 786 for the stock market from low to high. about 3,200. I mean, we'd probably bounce somewhere above that level for the S&P. But you see what I'm saying, guys? I mean, a lot of people right now are just tunnel visioned. They're just like, a bear, recession, that's all I see, down. And it's like, yeah, but be ready, guys, because we could easily sort of reclaim this area to meet the trend line for the next leg down. And in that event, if the stock market bounces, what's going to happen is Bitcoin's going to rally alongside the stock market, and people are going to say the bottom's in or whatever. But that's the next thing I want to talk about is the current setup for the weekly RSI. Check this out. Bitcoin on the weekly RSI is now in the same fractal as 2014, 2015, 2018, and now, right? Look at that. We're at the bottom of it. And back in April of this year, on this channel, on my Twitter, we were saying that we're expecting a cool down period. This was about the area that I sort of gave up on the bullish arguments, where I started warning people, telling all my friends, hey guys, this is starting to look a little iffy. We got, a stock market downtrend taking place. Bitcoin's in the same RSI fractal on the weekly as all other bear markets. If you look really closely, it was like that point in the trend where it was like one last uptrend line. And if we broke that, it was over. And I started to get really skeptical at that point. I said, all right, this is not looking so hot. And I started doing these bearish analysis back in April. And we were looking for a test down to the 30 level on the weekly RSI. If you look right here, the RSI was up here above 40. We were looking for a test down to 30. We were at like 41K. Now we're at 19. Now the RSI is down to that level. Okay, so we got that. We got that move. RSI is now down here, touched below 30 and bounced, just like all the other bear markets. And so, we are at this super historic moment in the Bitcoin trend. Pulling up linear scale, we're at the downtrend line. We're at the weekly RSI downtrend line. Okay. When you pull out log scale, right, which is, I would say more relevant for the long term, you realize, okay, we're actually quite far away. Like we're pretty far away from an actual breakout. And it is a recession period. So linear scale, we're right up against the trend line. On log scale, it looks like this, where, okay, yeah, we break out that linear scale trend. We probably end up getting resistance, along this downtrend line, and maybe even going lower. And then the RSI would probably break out and come back to retest it, maybe even go back into the 30 level again as the S&P dumps more and more. It's likely that the S&P is not bottom. It's likely that this recession continues on for much longer. And why do I say that? Well, I made this calculation on Twitter. I was talking about how non-recession bear markets last around 6 months. Recessionary bear markets last around 20 months. And if you average the 74 crash, 2001 crash, 2008 crash with 691 days on average, and then you take the average 20 months and the 691 days, take the average between those two, it's a 650-day average for a recession, which means that on average, in a recession, from the top of the S&P, which we saw recently, we would bottom in October of next year. Yeah, that might shock some people when they hear me say that right now. They might be shocked. You're saying, Kev, that we're going to have another entire year of going down? No, not just down. Macro down, yes. There's going to be rallies in between, guys. We can't just go straight down for 650 days. If we come back down for the S&P and then we bounce up and we meet the macro trend line, that eats up several months of time. And then coming back to those lows in of itself, that's another several months. And then coming down again, that's another several months. You see? So while it sounds like a lot of time, another year of recession, you're going to have a lot of action, guys. You're going to have a lot of upside opportunities, a lot of downside opportunities, more downside than upside. But you see what I'm saying. So this is why I'm trying to explain how, even if we do get a breakout here, on the linear scale line, right? Linear scale line, we're really close. The macro scale, log scale, we're far away. So if we break out RSI on the weekly, we'll probably test back down. You know, we're probably going to hold lower levels for quite some time. Bitcoin could even test to a lower low at some point after a bounce and bottom. You know, it might take a long time. It might take till, you know, mid next year to really get a breakout of this macro trend line, log scale. So anyway, just wanted to throw this idea by you because we've been talking a lot about recession, and everyone's just like blinded by that idea. And they're not realizing that in recessions, you got rallies. Even in 2008, guys, we went down, broke the 200 week for the first time, 2008. We bounced up 15% on the S&P. You know, 2001, we had multiple 20% bounces, 20% up, dips to a lower low, 25% up. And remember, from this low to the next breakdown, 300 days in between the two lows. 300 days, guys. That's an entire year in 2001 where you're at a low, you bounce, and a year later, you meet the, not exactly a year, but almost a year where you meet that low. You see how long these things take? You see how long that is? You know, it's a long time. If the S&P comes down and meets the macro trend line and then touches those lows again, I mean, in theory, that's a 300-day period. And so this is what you have to really, really imagine, is that if the S&P comes down a little bit more in October and then bounces, and we're up for 300 days before breaking back through the low. 300 days from here to here. Think about that. Think about what's going to happen. Think about what the news is going to be saying in here. Oh, you know, you're going to see experts coming on the news. Oh, it's you know, we're good. We think the worst is over. And everyone's going to go, oh, man, thank God we bounced. You know, maybe we can, you know, start buying again. Everyone starts to get a little bullish. Everyone starts to get a little less worried. And then a few months later, it goes tick, 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 tick. And it starts going down again. And then everyone's panicking again. And you have these, like, you know, ridiculous moments like that. The amount that people don't know and all the bull crap that's going to be said in between the next low and the next high and the low that follows, it's just going to be complete insanity. But you have to be ready for this. You know, I could be wrong and we could just go straight down. But of course, guys, think about it. We're probably going to bounce at some point. You got to be careful about, you know, just buying into the fear and down only. There's going to be rallies, even in a recession. So, you know, it could get worse before it gets better, but at some point, maybe we should expect a little bit of relief. If you guys enjoyed this video, I'll see you all soon.